Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again to the channel. So again, for those of you who are new, this is the Greedy Trader channel where we talk about all things market profile. So for those of you who've been following the channel for a while, then this is just another video. Now for those of you who are new to the channel, then welcome aboard. Everything I show you here is how to trade the markets from a professional point of view. I take into consideration a lot of things, statistical benchmarks. I work with a profile. It is what 90% of institutions use to do their trading. It's how you can properly understand how to allocate risk, how to day trade efficiently if that's what you do, how to swing trade. I have a more holistic view to the market, so I believe that you can't rely on just leveraged assets to make your money. You have to have more stable forms of making money, especially when it comes to markets. So for example, I sell premium, so I sell option premium. It's a more guaranteed form of income for me, and that means that I can focus on my leverage trading to just supplement that as opposed to it being the main source of my revenue. I treat trading as a business, so you'll hear me use terms like revenue because again, leverage trading is a source of revenue. If you worked for a hedge fund or a bank, they'll have different sections. Some will be leverage trading, some will be brokering for clients or order flow. Some of the revenue will be other kind of physical investments. Some of the revenue will be overseas investments. So it's about diversifying, right? So if you want to become a trader, you want to be able to stick with this, you need to be able to diversify your income sources. Some of it could be business. It could be you're an entrepreneur. Some of the money you make from your trading, you reinvest it into other business ventures, for example. So all in all, you need a holistic view to trading. And this is what I tend to talk about and I preach here. And this is what I tend to, the people who I work with, this is what I tend to tell them. This is how I show them how they can build a diversified portfolio, whether they intraday trade or swing trade, it really doesn't matter. In fact, I tend to do both. I would manage a portfolio of leverage funds wherein I'm diversifying properly against that portfolio. I'll also intraday trade around those core positions, for example, and all of these, I have specific revenue goals in mind that I want to achieve with each method. So it's not about the Lambo trading. It's not about, the big hits. For me, it's all about the base hits. So if you're new to the channel, guys, this is what you're getting here. It's high time that we all made trading real. I think there's a lot of stuff out there where people are, showing Lambos, huge hits that are not base hits that probably took a lot of risk in order to make those hits, and most people are not going to be daring enough to do it. Secondly, the people who do this, some of them are very, very young. I'm young, but I'm not that young, and that means that I'm staring a point in my life where a lot of people are in that position where you don't want to be taking stupid risks that you don't need to be taking. Being a trader doesn't mean that you have to be risky or drive a Lambo. It just means that you've managed to achieve a degree of financial freedom. So maybe you don't have to work for someone, or you don't have to be rolling up, at a particular time every day. So what you've managed to do is free up your time. I always say to traders that think of trading like it were a job, because that's exactly what it's going to feel like when you sit down and you want to get that business done. There's just no way you're going to be trading and then, heading off to the spa to do your run or your swimming pool or running in the Scottish Highlands. This is not the kind of stuff you're going to be doing. You're going to be in front of your charts most of the time, trying to pre-plan what you're going to do on your trades. Even when you're systemized, you're going to be looking at the best way to utilize it to improve your system, utilize your system effectively, right? When you lose money or you have down days, you're going to feel it emotionally as well. So it is just doesn't cater to the lifestyle that some people would have you believe happens as a trader. But it's the world we live in, guys. You know, everyone's trying to sell something. It's just the reality of it, right? Everyone's got to make the cheddar. Everyone has to respect that too. Okay, awesome stuff, guys. So as always, I've been talking a lot about day trading this week, right? Because it's something I don't really touch on as much, largely because I know that for a lot of people it's just unattainable. You know, how I do it is manageable for most people, can get involved quite easily. They need to have discipline, and they need to be able to understand that it's not about winning every day. It's about also managing the losses, deciding your max loss, and so on and so forth. So that's kind of how I handle things, right? So I'm going to first talk about swing positions. Obviously at the moment I'm focused primarily in the next couple of weeks just for the purpose of showing you guys how this can work. I'm focused a lot more on day trading, so I'm flat on most of my portfolio when it comes to swing positions, but we're still going to talk about them, and then I'm going to show you exactly what I'm doing with my day trading side, and I always put P&L on the screen. For me, it really doesn't matter. Whether it's a losing day, it's a winning day, you know, I don't mind. I'll show you guys all, right? At some point, you know, for the purpose of, you know, we never know who's watching, right? I will kind of stagger the days I do this, so it's not blatantly obvious, where people can literally calculate the amount of P&L that you make over a given period, because that has other kind of connotations, other things that you have to worry about as a trader. I would not like to be answering questions somewhere at some point. You know, it's just not worth it for the purpose of a YouTube video. So, but generally I will show you everything I feel is important to show you to aid you in understanding the best way to do this. So I'm going to work through some of the swing positions, you know, some of the core stuff we're holding, why we're holding it, and the methodology here is primarily market profile. We really don't talk about anything else. Personally, there is nothing else you could use that can give you a complete bird's eye view of the market whilst you're able to execute within that viewfinder window without having to do a top-down analysis of a monthly chart, weekly chart. You can basically see it in all one view. So I'm just gonna whip over now to the Aussie dollar. So we spoke about this last week, is that we got a massive gap in value, so expect the Aussie to rally. Structurally, the way we set up, we can see that bid settled here, so that's the main offer stack, and we've got some responsive buying, we've got a liquidity hunt, and we're now trading back up. So if we can settle this week here and then start to break to the upside, I wouldn't look for that this week, to be honest. A natural range should prevent a big break to the upside, so I would expect that we might trade down here for a little bit, and if we do pop, I would look for an upside break, especially trading over this week's high, which is the H period high. So Aussie dollar is looking pretty good, I think, in terms of a value position that one could look at getting involved in. So again, for those of you guys who don't know what a value trade is, it's just 70% probability trade where we're going to go through value if we trade certain sort of price levels. So for example, if we were to break up, form a balance here and start trading within this value, then there's a higher probability that we're going to trade to the top of the value area. So it becomes a value trade. It's based on the mathematical bell curve theory, but I won't get into that right now. By the way, guys, I'll leave in the description below. I have extensive coursework on market profile. Check out the description below. I also have a free Discord server that people can go in and learn a lot about what I do with market profile. So I post a lot of stuff up there. Great environment, lots to learn, I think. So again, check it out. Right, crude oil. Again, I was structurally bullish on crude. Sadly, we are tracking a little bit lower at the moment. I well out of this crude position. I'm sure a lot of people are wondering why I took that position off. So if you go back and watch some of my previous videos, you'll see at the point where I took that crude position off, and now we're backing up lower. Now again, it doesn't mean I'm entirely bearish on crude. I want to see what happens coming into the next couple of weeks. We have a lot of competitive buying S period, so beating this low is not going to be easy. And if we do, you can anticipate that it might even be a liquidity hunt, and then we might move a little higher. So I'll pay a lot of attention to crude oil in the next couple of weeks. The S&P 500, I'm structurally bullish. Obviously, again, this dip here was just really a gap fill. We did speak about that. So if you wanted to short this, I seriously would think about jumping out of that short. I'm structurally bullish. We can see that balance here. We can see where the traders are trapped a lot. So from my standpoint, once again, we may well end up trading into bids, and I would want to pay particular attention to that. So I personally wouldn't want to be short this thing. So again, it looks like very interesting. If we start to make it up to the upside, I think we're going to get a big break on the S&P. For me, the target has still been sort of that 4,300 level before we start seeing any real selling coming in. Again, from gold standpoint, we spoke about this as well, that we were long-term bullish on this one. And as you can see, we got rejected from this value area. We did the value trade, we traded into that offer stack, and now we're struggling, right? So we did talk about that last week. So you're not really seeing anything different. Again, if we settle up here this week, then expect for us to chase. The real level is here, beating value high from the prior week. If we can do that, then there is a very good chance that we're going to move it to the upside. So again, cable, similar story. We spoke about this. In fact, we were structurally bullish on cable. We did take a little bit more downside than expected, but again, we did the value trade this week. In fact, we're trading double value, and look at that gap in value here. It's the same thing we were seeing in the Aussie right here. So those are inefficiencies, guys, so they need to get filled. So again, you can only ever see this if you have a market profile tool. Dollar yen, we were structurally bullish on this one, very similar to the S&P here. There is a slight correlation between these guys. That sort of broke off over the past couple of weeks, but we're seeing that come back now. So for me, I'm structurally bullish on this one. Any more upside movement, we want to take advantage of that. Any more downside movement, we want to look to buy bids. So here you can see we got a gap in value, very similar to what's been reflected on the Aussie and some of the commodity dollars. So again, we should pay attention to that. Dollar CAD, value trade for sure. From the way we're setting up, it's more than likely we might get a dip to the downside. So again, the main offer stack was here. That was always the struggle to beat. You can see we've struggled against that over the past 2 weeks. For me, the bids are down here, so let's see how we play against this value. There's been a lot of churning here, so we'll see how we do. Bitcoin, again, warned everybody last week that I like to see more downside on Bitcoin. 25k becomes an interesting bid level, and I did say that it's showing us the upside, but we have to beat this value high. And look at that competitive seller here, G period, right? So it's really tough getting over these the offer stacks here. So in my opinion, we are probably going to see very quickly the Z and J period lows go, and then possibly it starts to get interesting at 25k in my opinion. That's the real level, that's the big bid stack. If there's going to be any more upside to Bitcoin this part of the cycle, it's going to come here. So I'm not bearish on Bitcoin, I'm structurally bullish over the longer term of the cycle, but that's kind of what I'm looking at. Sterling yen, structurally bullish, it's still going higher. We had a position in this was one of the positions we flattened, so it was a really good collect over the swing positions. So again, keeping an eye on that one. The Kiwi, similar to the Aussie, same story. We did break some key levels here, we broke the bids here, so we really need to see a lot more intent to buy this to the upside. So for me, I wouldn't touch this just yet. So that's kind of how we sit on swing position. So if we just forget about that for a second, and let's talk about the intraday stuff. So again, like always, we've been looking primarily at gold. What do I always say to you guys is that we want to trade off places of liquidity, and we want to be a little bit systematic if we're dealing with the intraday. The thing that we really want to know about is our numbers. So we want to have a very, very good handle on our numbers. Like, so how much money are we risking? How much are we going to lose? And it's not always about having asymmetric, i.e. risk to reward ratio. Sometimes it's important to be a little bit more symmetrical, especially when you're dealing with the intraday. And there's a couple of reasons for this. The first is that everyone's trying to get an asymmetric risk reward profiling, which means that the market ultimately already knows this. So there is a very, very, very small chance that you're going to be able to achieve this at least consistently. So we want to be trading off areas where the liquidity is strongest, and we know that's the European Open. We also know the US Open plays a major role. My focus tends to be the European Open, especially when dealing with assets like gold, for example, which is what we're looking at right now. So again, we opened this morning, started to shoot lower, strong European Open, and we wanted to be short. Now, yesterday we had a similar issue to this. We were short into the European Open. So as we sort of were breaking out, we were short, and then we got this big reversal, and then we went long, and then we offset what was that downside risk. Now, I almost always look to offset about 50% of a bad day, because realistically it's all about numbers and probability for me. I know over a given period of time my occurrences have a high probability of their outcome, that really and truly I'm not so concerned about having that massive asymmetric risk profile. What I really want to be able to do is to be able to allow my trade to breathe. Like, professional traders think a lot more about where they're trying to get to, what risk are they going to allocate, and they need to be able to calculate that against their entire P&L or balance of account. So if you can do that over, say, your entire account, you can break it into 30 trades, for example. That means that you've got 30 occurrences. Even if it was a coin flip 50-50, there is a very good chance that if you have like a 2-to-1, for example, risk reward ratio, or even if you have a 1-to-1 risk reward ratio, you're still going to be largely flat to profitable, right? So really and truly what you want to be able to do is push the occurrences 70-80%, right? And that means you've got to allow your trade to breathe. So there's always a trade-off when you think about trading, right? So here we can see we struggled, so today we had a similar scenario where we traded for liquidity just below the low of last week, and then we reversed, right? So this is clearly a liquidity hunt. But the thing is, you can't normally tell that that's going to happen, right? It'll be another trading strategy if you were just looking to filter for this. It's pointless. You need to stay systematic so you can get the best moves. So I was anticipating this is going to go down. It didn't. So we were short in the hole. And then obviously you can see here that build up, right? So you can see quite quickly, we saw bids coming in, nice little bid stack, and then we started to work our way upwards. Now there is nothing to tell you that we're going to be able to take the European highs, right? So again, even if we were to go up, we could have easily sold off. So again, you don't want to second guess this, but as soon as we took the European highs, it made sense to be long, and then we're immediately looking for an offset. Now, based on the way we've structured, we can see there's some long liquidations here. If this gets held up, my thoughts is that we got a nice little gap in value, so we're probably going to fill that across the US Open. But you know what? I really don't care. Even if we were to break down, it wouldn't really matter to me. Ultimately, it would just mean that we'll be back down into European trading prices, right, into the US session, so just weaker gold. Now, we want to stick with just one session, because realistically, if you start trading multiple sessions, you're going to get yourself into a pickle. I'm a believer in 2 trades a day. We don't want to exceed that, right? We definitely don't want to exceed that. So from where we are, pretty much done for the day. P&L on screen, as you can see. There you have it, right? It doesn't really matter. You have a down day. Obviously, you can see how we've managed those losses across 2 days. The thing about trading is that you're not going to know when you're going to have your loss occurrence. No one wins 100% of their trades, 90% of it. It's just all this stuff isn't really feasible. So you're not going to have a situation where your loss occurrence is going to be low, right? So you're probably going to be around sort of maybe 40% loss, 30% loss, depending on how you like to trade, how much wiggle room you want to give your position, how much capital you have. So there are a lot of factors that are going to determine as to whether, you're going to be able to handle certain strategies. But either way, I look to offset. There are a couple of ways you can do this, but I won't get into that now. But I look to offset as soon as we get that signal that we're going to be to the upside. So we were short, long, covered, and then now we wait, right? So at this point, we've offset. Now all we're doing is we're waiting for the next day. No more than 2 trades in a day. Because again, we don't know what's going to happen in the US session, and we don't really want to be around for that. That just doesn't make any sense. So reality is that you will take some lost days. It's your winning days that you want to get to make up for that. So you need a strategy where your occurrence is really, really high, right? And that's what you're looking for. That is the key. So hopefully you guys have enjoyed this video. We will talk a lot more about this in future videos. So guys, hit the like, subscribe button. This is where we try and make trading real. We try and buck the trends that are going about, that even though we can all see they're definitely not working for traders, but everyone's pushing down that direction. So on this channel, we try and show you a different side to things. So if you, again, like the channel, subscribe, you help grow us, you help, the YouTube algorithm decide that we are here to stay. But till my next video, guys, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?